This is day 8 of 30 of buying $1,000 worth of Bitcoin every single day for 30 days straight. Now, for those of you who are following this story, I want to talk to you today about why I'm actually implementing this dollar cost average strategy and why I started when I did. So the reason I started when I did was because there was a lot of uncertainty in the market, and overall, I'm a long-term believer in Bitcoin. So when there's uncertainty, what we see happen is prices get quite volatile. And for those that are following me, you know that the reason for the volatility was because of Donald Trump's tariff on all countries that weren't going to vote for him to acquire Greenland. And so what happened was instantly price went from about 95,000 to around about the $90,000 level. So instantly there was fear in the market. And it was a potential that over the next few days or week, we could drop further down. For those that don't know, in the previous bull market, the highest price that Bitcoin got to was around that 64,000 level, okay? And so the previous bull market's high usually acts as a very strong level of support. Like it's very unlikely that we retest lower than that level ever again, okay? And we're currently at what, 90,000, so we're about $30,000 off that price. So what it meant for me was, if I started implementing a dollar cost average strategy in a time of high uncertainty, what I might see happen is price may come down over the next 30 days, 60 days, whatever it is. But in the medium to short to definitely long term, I believe Bitcoin should be valued at least 120 to 180,000 US dollars. So I'm happy to, I don't want to put all $30,000 in on that day one price at the 95K level, because then if the market drops down to as low as 60,000, then I've spent all my chips at once, you know. But what I am happy to do is to every single day buy $1,000. I'll pick some up if it drops to 90K level. If it drops to 85K level, I'll pick some up. If it drops all the way to 60,000, I might pick some up. So that's the reason why I started when I did, because I thought there was going to be a bit of price uncertainty. I thought Bitcoin was undervalued. There's another reason that I started when I did as well, which I'll explain in a second. The other reason that I implemented the dollar cost average strategy when I did is because at the moment, cryptocurrency and particularly Bitcoin is heavily underperforming compared to assets like gold, for example, which is absolutely pumping right now. Assets even like the stock market, which has had a good run last year, definitely, and not doing too bad right now either. So that's another reason why I started the dollar cost average into Bitcoin, because as I say, I'm a long-term believer in Bitcoin. So I'm more than happy to keep building exposure up, particularly when it's undervalued, and I think potentially it could actually slide a little bit further down. But in the medium to long term, I'm a strong believer that it's going to go up, at least to 120, 180K within the next year or two is my projections. So that's a little bit of understanding for why I implement the strategy at the time that I did, and also why I do a dollar cost average strategy rather than just dumping it all in at once. Hopefully that helps you guys. Make sure you follow, because I'm going to be going more into the strategy itself and how it's playing out on a daily basis.